Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is going to be the Mini Russell futures contract, actually front month in nature. Now looking at the Septembers, as most have rolled over yesterday or today. This, of course, Thursday, rollover, 7th day of June 2012, looking at an exhaustion gap on the upside on the early session, and who would not sell that gap? You got literally a move from 730 to 775, 725 to 775, we'll call it. That's 50 points, and I mean, who's not going to be fading that gap? Anyone in their right mind would be doing so. So we're actually going to look at our intraday dynamics. These are our proprietary indicators, what we use to gauge the market and where it's likely to go. And as you can see, yesterday was just simply a beautiful day. It was literally green, green, green. Green means bulls and buy. And that's exactly what happened. We had a beautiful, just a skim of our key measure of trend following support resistance and a bounce higher, actually a close above the high of the mid-session, close near the highs, and that's of course why you got this exhaustion gap. But again, just beautifully retesting once we have filled that gap, retesting our measure of trend and just walking along, just skimming along. We're seeing a bit of a divergence in our indicators right here. You see a negative divergence here, higher price, lower price, higher indications, lower indications, obviously a negative divergence. Bearish, all out bearish here, and of course extreme divergence there, all out bearish here, and a divergence there. So definitely the market is tired, and we're not going to make any prognostications right here. We're certainly not going to buy here at 1322 on the ES. In fact, we're not going to have an informational free day trade in all likelihood, because there's just really no, at this point, there's really no reason to get involved in the market once it's had such a significant move. So moving on to let's quick look at the intraday analytics, and we'll go ahead and minimize that and look for our chart of the daily. We'll take a quick look at the daily, and I believe that's right here. There we go. So now we're looking at a daily chart of the continuous contract of the mini S&P 500 futures, looking at a last print of 1315.25, having come up to just around 1330, and what a beautiful move. Our key measure, our be-all, end-all, is really this green line right here, but this lighter green, aqua line, is the actual, this is a variation of this indicator. So what's interesting is this is where we gauge, and unfortunately in this circumstance, converse to back here, you had the market keying off of that, the lighter, the aqua, and actually the same indication happened here. It busted through, keyed off the aqua, came down, and eventually broke the aqua, and again came down, tested our key measure, broke through, came down, tested the aqua, and has bounced significantly. And of course we've been participating rather nicely, rather markedly, particularly yesterday. We'll look at some of the trades in our portfolios yesterday, as well as you get this beautiful move to the upside. So we're right now holding. What's interesting is not only do we have this key measure of now, of course, we're neutral. Our official market timing bias is still neutral after having gone literally about 200 points on our last bullish signal, unofficially bullish at 11:30, officially bullish at 12:30. The exit, I believe, was around 1350, if I'm not mistaken. So not too bad, over 100 to 150 points or so, I'm sorry, 100 to 200 points or so on those timings based on unofficial and official. In fact, we had mentioned unofficially to our clients that we're going to have a great scalping opportunity from 1350 to 1300. That's of course what we've gotten. We've mentioned those in the videos. That's of course what we saw. And of course we got the bounce back to this. We rolled over. We tested the last bastion of support resistance for the market around 75. Market actually tried to fake out, go down to 60. What's interesting is once you got this move, you didn't even see a lower close. So once you got this breakdown and the test here, the breakdown of our key measure and the ultimate test here, you never saw a lower close in the market, higher close and another higher close, slightly higher close, and we may get a higher close today. I'm not really sure, but it's kind of an inside day, but we're in no position to move to any official bias other than neutral at this point. As you can see, our key measure of trend following support resistance, this blue line, this royal blue, 1340 is the key level. That's our key measure. The be all end all for us is this green level, but obviously it can be either of these. So the first thing you see is we're just merely in the thick of things. The market's very unlikely to make any significant progress, and we have the great opportunities to get involved in the trading of the market. And as you can see, we can switch over to look at some of those opportunities. Before we do that, so we've looked at the intraday. Excuse me, we've looked at the daily analytics, neutral, as you can see, just really painting itself into a corner from 1340 down to 1260, arguably 1280, we'll call it. So 1280 to 1340 is usually pretty key levels. So if we get a significant break above those levels, we'll move back based on market dynamics. We'll move back to a bias, but right now we're holding neutral. So there you go. There you have it. The quick look at the daily chart. As we're looking at the, we'll switch over to look at the MRSEM. What a short we've had in the MRCM. 955 is a short. Got down to about 870. I'm sorry, 880 in the contract. This, of course, is the front month now. So just absolutely beautiful short that we've had. We'll take a quick look at the performance report of the MRSEM and move that over. $12,000 drawdown, so not the most favorable, but look at that. Not too bad. Had kind of a choppy session. This is 10 years going back. So this is kind of what we do. Just just kind of an indication is we definitely like our models to continue. The MRCM has probably had maybe 5 years and still going strong. There you can see $460 every time you place a trade, $92,000 in profit. So what's interesting is we'll switch over and look at the here's our free model. No trades. We're going to take a quick look at the sentiment picture, and as you can see, the VIX has fallen rather markedly following that reversal day right here. Bam, we got a reversal in the VIX. Nice bearish but bullish for the market, tail reversal right there and follow through. Just a beautiful setup, and the index has actually followed through and broken the midline, so that's pretty impressive. And of course, we got the subsequent move in the price technicals in terms of the mini Russell, and we've got a nice move higher. But again, just really a neutral state. Are we willing to call this a dangling participle, and meaning that we've got a continuation move likely to about 830? Not really yet. We're going to wait and measure the dynamics, but we are seeing some pretty favorable fear, level of 1 in our equity per call ratio, level of 1. So that suggests that there's still some fear in the market, and the market could go higher, but we could get some more spikes. So we'll just continue to look at the price technicals. One thing we did want to mention is MSAUDT. Which is probably one of our more popular portfolios. It's just a $10,000 portfolio. That's the minimum capital recommended, although the actual drawdown of the portfolio historically, including slippage and commissions, is around $12,000. The margin is actually only $3,000. It trades 6 systems, 1 lot apiece. And so at $500 day trade, it's $3,000 margin, $10,000 minimum to get started, and the historical drawdown has been $12,000. We had mentioned that we have eclipsed that drawdown recently. So what we did was, in hearing some feedback, went through and made a couple of changes in some of the key components of the MSAUDT. In fact, we'll take a look at that right here. So we're looking at the MILTF. So you see right here, went back and kind of looked at the older versions. Not sure if this is exactly, but it's pretty close. Most importantly, the average trade of the old MILTF was just $45 after slippage and commissions, $40,000 profit, but a $10,000 drawdown, and that's pretty close to the actual old TF. We're going to look at the new TF here. We actually saw a price MILTF. We actually saw a price profit go up. About $3,000 to $42,000, but the average trade jumped to $132, and the drawdown went down to $2,700 from around $10,000. So everyone knows that MSAUDT is an extremely aggressive portfolio, what with 120% drawdown of the minimum capital required. But there's always room for improvement, and we'll go ahead and take a look here. Off to a nice start, because as you see, the old MILTF didn't even trade yesterday, whereas the newer version, the revised iteration, actually had a beautiful winner yesterday, almost $1,000 a contract. Not too bad. So it's a mil TF. Day Trader 16 is actually hasn't been trading much lately for the MSCI UDT, so we'll go ahead and minimize that. And now we're looking back at the EVR3 TSR. We wanted to bring up, if we could, this may actually be just what we looked at, and I thought it might be. So we'll just go ahead and move over to, it should be this right here, maybe. It's Evo. Evo had a nice little trade yesterday, but did not bought at the highs this morning. That's of course also part of the MSCI UDT, both the Evo Day Trade 1.0 and the one lot version actually did not trade, so that was fortunate this morning to avoid a loss there. Evo EM active. This is absolutely insane. Look at the beautiful. This should be. In fact, we've got some clients that have substituted other EM systems for this model, and you can't blame them given the portfolio or the system. Look at that. 2 beautiful winners, 3 beautiful winners. Whereas the Evo, the traditional Evo on the TF, just 1 winner and that. So that would not be a bad addition. But we're actually looking over to, if we can switch over and find eventually. Not sure why we can't find it. Now I think I know. Not sure why I can't find it. Not sure why I would have done that. So I think it's over here. There we go. So we have some. Here's the old R2K DT60 right here. This is the old. And what's most interesting about this is the older version. That's a loss right there, and that's a gain. So that's funny. I mean, these are obviously extraordinarily similar models. They're just innovations. I don't know what that was, but we can pull this up to look at $101,000 for the old version, and that's over the last 10 years. $100,000, $100,000, $9,000 maximum drawdown, just $57 every time you place a trade after substitution commissions. So we're gonna take a look at the new version. We jump up to $80. Profit goes down rather significantly, but so does the risk, almost cut in half. And this is the only one where the profit was dropped, but the average trade went up probably about 50%, so not too bad. Day Trader 8.0 is also another component. Here's the older version. Again, what's interesting is the older version didn't even trade yesterday of the Day Trader 1.0, so we'll take a look at the older version. $35,000 is the profit, $5,800 is the maximum drawdown, $45 average trade. What happens here? $150 average trade. Risk goes down to $3,000, 42,000. So profit jumps 7,000. Risk gets cut in half. Pretty impressive stuff. So we've made some improvements, as it were. So we're going to keep moving on. We'll go ahead and switch and look at some of our platinum models. That's the MSCI UDT and some components of the Delta DTS. In fact, wow, Delta DTS gained 46 with the aggressive version, 46% yesterday. Pretty impressive was the Delta DTS, and we'll take a look at that in a second. So there's the EVR3 TSR. Nothing today, nothing yesterday. Nice little setup there. EVR3 AC TSR, beautiful. Long yesterday. Could not ask for anything better. And these, of course, are green dot models. EVR3 filter, R60F. Beautiful winner yesterday. We had tons of models firing off yesterday, and anytime you get that many models firing off, it's usually going to be a fortunate day. Here's the EMDS catching a beautiful long from 900. EVR3 VSR, 2 beautiful winners. MRCM PTL, not really trading here. R30C, no real trades. Last one was a nice winner. R30B, couple of nice winners. R30A, several nice winners. No real trades as of yet. Recently, EVMCM got kind of caught in some chop, as you can see there. CBR, beautiful winner yesterday. ISRD, here's another interesting example. Done some improvements. Here's the ISRD. You'll take a look at the performance, and you can see here's the traditional ISRD. $96,000, $232 every time you place a trade. That's over the last 12 years. I think this one should, I guess, be the same. So 12 years, 13 years. So the profit, what's interesting is the profit goes up to 105 from 96. Risk goes down from 11.5 to 9,500, and average trade goes up to 279 from 232. And what's interesting about that is it's right off, it was already paying us dividends on these last two trades. As you can see, we were able to capitalize nicely on the short side. And well, look at the comparison of the old versus new. So this is already paying us tremendous, or already has paid us tremendous dividends in the amazing trading, and of course exited the long on the open this morning. EVR3, take a look at that. Two beautiful trades. Kind of got in a little bit late compared to some other models, but did participate yesterday in the move higher. ES30MX, some beautiful winners. One loss. Look at all these amazing winners. ESM30, a lot like the ESM30X, but obviously the ESM30X has one little winner. ESM30 has a few back there. So my voice is extremely monotone, and we'll go ahead and minimize this and hopefully don't go to a blank screen. There we go. Taking a look at the models yesterday, and I'm not sure why that's ginormous, but the Delta DTS gains yesterday. Now the Delta DTS is it trades 9 models, so at $500 margin you're looking at $4,500 margin. Delta DTS $4,600 yesterday. On the standard model is $15,000. You can trade it with the $10,000 model, given margins just $4,500. That even gives you $5,000 to weather any kind of average drawdown, assuming you don't start at the big of a major drawdown, at the top of a big drawdown. $4,600 the portfolio made. MSAUDT made $2,000 yesterday. Matt Black, the most diversified, comprised $100,000 portfolio, made $10,000 yesterday. So you see the percentage is pretty impressive. Want to get started? All you have to do is go to the website, subscribe, and of course our most recent performance reports are out here, but we can click. Let's go to the website. I'm not sure why everything is so ginormous on this computer, but we can go to Delta DTS, and you can take a look at the historical performance of the Delta DTS right there, the real time. And you want to click subscribe. Just $988 every 3 months. It's unbelievable. $300 a month for 9 trading systems and making $4,500. I mean, obviously, one day will cover your entire year. And it's, of course, all with full automation. You don't have to do anything but have the account and have it funded. Everything runs with full automation. If you guys have any questions, go to the website, chat with the support team live. If you want to save an extra 20% when you purchase, use promo code VIDEO. And hope you guys enjoyed the video, and we will see you next time.